Welcome to our Hong Kong Brief program. Today, we dive into some exciting updates from the vibrant city of Hong Kong. First off, Chow Fook Jewelry Group is getting a major facelift as it approaches its 100th anniversary. Sonia Chung, the group's vice chairwoman, is on a mission to revamp the brand, aiming to attract a new generation of customers with an elevated brand experience and unique product offerings. Next, we're seeing a surge in Hong Kong stocks, thanks to China's market regulator pledging support for the city's IPOs and expanding the Stock Connect scheme. This move is seen as a significant boost to Hong Kong's status as a financial hub. Lastly, biodiversity is about to become a crucial part of international sustainability reporting standards for businesses, marking a significant step towards integrating nature-related financial disclosures globally. This comes after a milestone vote by the International Sustainability Standards Board. So, there's a lot unfolding in Hong Kong, from finance to sustainability and retail transformation. Stay tuned for more details on these stories. In the bustling financial and commercial hub of Hong Kong, the winds of change are blowing through the corridors of traditional businesses and the stock market, signaling a transformative era that could redefine the city's economic landscape. Among the vanguards of this change is Sonia Chung, the vice chairwoman of Chow Fook Jewelry Group, one of Hong Kong's oldest and most esteemed jewelry chains. As reported by the South China Morning Post, Chung is on a mission to rejuvenate the brand as it approaches its centenary in 2029. With an ambitious plan to overhaul the brand within the next 5 years, Chung aims to elevate the brand, enhance customer experience, and introduce distinctive products and collections. This strategic move is not just about staying ahead in the market, it's about capturing the hearts of a new generation of shoppers, ensuring that Chow Fook remains a market leader in the ever-evolving luxury goods sector. Meanwhile, the financial landscape of Hong Kong is experiencing its own surge of vitality. Following a series of market reforms announced by China's market regulator, Hong Kong stocks have soared, as detailed in another report by the South China Morning Post. The Hang Seng Index and the Tech Index witnessed significant gains, buoyed by the China Securities Regulatory Commission's pledge to support the city's initial public offerings, IPOs, and expand the Stock Connect cross-border investment scheme. This move is a clear indication of China's commitment to enhancing Hong Kong's status as a global financial hub, promising a brighter future for investors and companies alike. On a broader scale, the world is waking up to the critical importance of biodiversity in the realm of international sustainability reporting standards for businesses. In what the South China Morning Post describes as a milestone vote, the International Sustainability Standards Board, ISSB, is poised to include biodiversity as a key component of mandatory nature-related financial disclosures. This decision underscores a growing recognition of the sustainability-related risks and opportunities associated with biodiversity, marking a significant step towards integrating environmental considerations into the fabric of global economic activities. As the ISSB prepares to vote on adding this crucial element to its work plan, the move signals a pivotal shift towards acknowledging and addressing the intricate relationship between business practices and the natural world. These developments, from the strategic transformation of a century-old jewelry brand and the bolstering of Hong Kong's financial markets to the inclusion of biodiversity in sustainability reporting standards, reflect a broader trend of adaptation and innovation. As businesses and financial institutions evolve to meet the demands of a changing world, they not only contribute to economic growth but also pave the way for a more sustainable and inclusive future. Whether it's through revamping a venerable brand, enhancing a city's financial allure, or recognizing the intrinsic value of the natural environment, these initiatives exemplify the dynamic interplay between tradition and progress, highlighting the potential for positive change in various spheres of society. In the vibrant city of Hong Kong, a significant event is on the horizon that aims to position the metropolis as a beacon of culture, innovation, and sustainability. The APEC Business Advisory Council (ABAC) meeting, as reported by the South China Morning Post, is set to draw delegates from across the Asia-Pacific Economic Cooperation (APEC) region. This gathering is not just another meeting, it's a strategic platform for Hong Kong to narrate its compelling stories of progress and vision. The APEC's agenda is to provide sage advice to economic leaders, ministers, and senior government officials on pivotal areas such as trade and investment facilitation, digital transformation, sustainability, and inclusion. A spokesperson from the government's Trade and Industry Department highlighted that the APEC's work aligns seamlessly with Hong Kong's policy priorities, emphasizing that the city has a lot of good stories to tell. In another part of Asia, investors are facing a challenging landscape, as detailed by Nikkei Asia. The financial markets are currently navigating through tremendous currency pressure, primarily due to the robust strength of the US dollar and anticipation surrounding the Federal Reserve's monetary policy. Particularly, the Indonesian rupiah and South Korean won are experiencing significant depreciation, placing investors who are engaged in local currency debt in a precarious position. They are now compelled to devise strategies to hedge against the looming foreign exchange risk. This turbulence has led to a noticeable net outflow of $4.1 billion from the Asian bond market in March, marking a stark reversal following 4 months of consistent inflows. This scenario underscores the intricate dance between global economic policies and local market dynamics, challenging investors to stay agile and informed. Back in Hong Kong, a clarion call for economic reinvention and recovery is being sounded, as reported by the South China Morning Post. With national security concerns now addressed, the spotlight turns to rejuvenating the city's economic landscape. Xia Baolong, the director of the State Council's Hong Kong and Macau Affairs Office, has articulated a vision for Hong Kong's future that pivots on innovation, competitiveness, and a proactive approach to problem solving. Xia's message is clear: while the central government has laid the groundwork for national security, it's now time for Hong Kong to focus on other pressing issues with a new mindset. He advocates for bold action and leadership from the city, emphasizing that reliance on Beijing for solutions is not the path forward. Instead, Hong Kong is encouraged to chart its own course, leveraging its unique strengths to foster an economy that is resilient, innovative, and competitive on the global stage. These narratives from different corners of Asia highlight a common theme: the need for adaptability, innovation, and proactive leadership in the face of changing economic landscapes. Whether it's through showcasing cultural and sustainable advancements at the ABAC meeting, navigating the turbulent waters of currency pressures, or embracing a new economic vision for recovery and growth, the message is clear. Asia's economic players, from governments to investors, are being called to rise to the occasion, embracing the challenges and opportunities that lie ahead with creativity, resilience, and strategic foresight. In the bustling heart of Asia, Hong Kong's legal and technological landscapes are undergoing significant transformations, reflecting the city's adaptability and its pivotal role on the global stage. Amidst these changes, the South China Morning Post reports that Hong Kong's Justice Minister, Paul Lam Ting Kwok, has issued a stern reminder about the city's new domestic national security law. Despite the law being a month old and having not resulted in any arrests, Lam emphasizes its importance, stating that it will be wielded in compelling circumstances to ensure it does not become a useless piece of paper. This statement comes amidst a backdrop of international criticism, particularly from the US and UK, highlighting the global scrutiny Hong Kong faces in its governance practices. Meanwhile, the world of automotive manufacturing is buzzing with news from Bloomberg about Honda's ambitious plans in Canada. The Japanese automotive giant is nearing a deal with the Canadian government to significantly boost its electric vehicle (EV) production capacity in Ontario. This initiative includes processing cathode active materials, constructing batteries, and assembling battery-powered vehicles. With the Canadian government offering to subsidize a portion of the capital costs, this move underscores the global shift towards sustainable transportation solutions. It also highlights the strategic economic dance between nations, as Canada seeks to secure its position in the North American auto industry in the wake of the U.S.'s Inflation Reduction Act. On another front, the South China Morning Post reveals how global accelerators and incubators are flocking to Hong Kong, aiming to transform the city into a bustling hub for startups and technological innovation. The Otlotl Innovation Center, a biomedical research accelerator, plans to inject 50 million Hong Kong dollars, $6.39 million, into Hong Kong's startup ecosystem over the next 3 years. This investment aims to bring at least 20 companies to the city from around the globe, showcasing Hong Kong's allure as a tech hub. Similarly, the Founder Institute, a renowned pre-seed startup accelerator based in California, has announced its intentions to open an office in Hong Kong. Their goal is to nurture 100 global startups in the city each year, further cementing Hong Kong's status as a crucible of innovation and entrepreneurship. These developments paint a picture of a city at the crossroads of tradition and modernity, grappling with the challenges of national security, economic sustainability, and technological advancement. Hong Kong's strategic responses to these challenges, from enforcing a domestic security law to enticing global tech ventures and embracing the electric vehicle revolution, underscore its determination to remain a significant player on the world stage. As the city navigates these complex waters, it continues to draw attention and investment, promising a future that is as dynamic as it is uncertain. In a world where the stability of markets can turn on a dime, gold has always shone as a beacon of security for investors. According to a recent report by the Australian Broadcasting Corporation, the allure of gold has intensified, with its price surging to record highs. This precious metal, long revered for its ability to hold value and act as a hedge against inflation, is now predicted to soar even further. Canadian billionaires Pierre Lassonde and Eric Sprott have thrown their weight behind this prediction, forecasting gold prices to range from $3,500 to $8,000 an ounce. The driving force behind this golden rally? A confluence of factors including rising interest rates, the looming U.S. presidential election, and the ever-present shadow of geopolitical risks, all contributing to a global atmosphere ripe with uncertainty. As more people rush to open accounts and trade gold, demand surges, pushing prices to unprecedented levels. This trend not only underscores gold's reputation as a safe haven during tumultuous times, but also highlights its enduring appeal amidst financial instability. Australian gold miners, who produced a whopping 304 tons of gold last year, are riding this wave of high demand. Despite a decline in gold production, these miners are optimizing their output by blending lower-grade ore, ensuring that every ounce counts in a market hungry for gold. The surging spot price of gold, while not yet fully reflected in the share prices of mining companies, offers a silver lining, enabling miners to plan for a future that looks golden. On a different note, the South China Morning Post sheds light on an unexpected predicament faced by travelers with passports issued by Malaysia and Singapore. A fascinating study suggests that by the year 2531, all Japanese could potentially share the same surname, Sato, if the country's current laws, which prohibit married couples from using separate surnames, persist. This peculiar phenomenon has already caused delays at Japanese airports, where the global diversity in naming conventions has led to confusion. The study provocatively questions the necessity of surnames for identification purposes, highlighting a unique challenge in a world where cultural practices vary widely. Meanwhile, in Hong Kong, the South China Morning Post reports a concerning trend, a resurgence in fraudsters hijacking WhatsApp accounts. The city's police force has raised the alarm over scams that have seen losses exceed 20 million Hong Kong dollars, $2.6 million, in just the first quarter of 2019. Senior Superintendent Leung Oi Lam pointed out that these cases of messaging account hijackings had shown signs of resurgence since late last year, with scammers pilfering more than 65 million Hong Kong dollars between August and December 2018. This worrying development underscores the evolving nature of cybercrime and the need for vigilance in our increasingly connected world. These stories, ranging from the economic to the social and technological realms, offer a snapshot of the myriad challenges and opportunities that define our times. From the surging prices of gold reflecting global uncertainties to the peculiar challenges posed by naming conventions in Japan, and the alarming rise in cyber scams in Hong Kong, each narrative provides a unique perspective on the complexities of the modern world. As we navigate these turbulent waters, the stories remind us of the resilience, adaptability, and vigilance required to thrive in an ever-changing landscape. In the vibrant city of Hong Kong, the echoes of Broadway have finally returned, bringing with them a melody of hope and excitement that has been dearly missed. The Sound of Music, a timeless classic that has captured hearts around the globe, marks the city's first Broadway musical since the pandemic, heralding a new era for cultural exchanges and entertainment. Presented at the Shih Tzu Center in the West Kowloon Cultural District, this production isn't just any rendition. It's a spectacle directed by Tony Award winner Jack O'Brien and brought to life by an all-Broadway creative team. But what makes this event even more significant is its co-presenter, the China Arts and Entertainment Group, CAEG, a state-owned cultural enterprise. This collaboration underscores a bridge being built between Eastern and Western cultural landscapes, with CAEG choosing the English version of the musical to preserve its original Broadway allure. Running from April 17 to June 9, with a total of 64 performances, The Sound of Music's arrival in Hong Kong is a testament to the city's robust and sophisticated ecosystem for musicals. The West Kowloon Cultural District's initiative to diversify its offerings from Chinese opera and original Hong Kong productions to include Broadway musicals signifies an ambitious step towards enriching the city's cultural fabric. This strategic move, supported by CAEG and Broadway Asia, not only caters to the growing market for musicals in Hong Kong and mainland China but also celebrates the differences between the two, with Hong Kong being recognized for its more developed musical ecosystem. Amidst this cultural renaissance, the property market in Hong Kong, a city renowned for its skyscrapers and bustling real estate scene, finds itself at a crossroads. Christian Ulbrich, the global head of property services firm JLL, offers a perspective of optimism and resilience. He encourages Hong Kong to play to its strengths, focusing on its unparalleled infrastructure and strategic connections to mainland China. Despite facing challenges and losing some of its sheen as a world-leading property market, Ulbrich believes in Hong Kong's enduring appeal as a top financial hub. His confidence is not unfounded, as Hong Kong continues to be a pivotal market for JLL, boasting the largest number of employees in a single market globally. This insight from a global property leader underscores the potential for Hong Kong to find its niche and thrive amidst changing global dynamics. In tandem with the cultural and property sectors, Hong Kong's retail landscape is also witnessing a transformation. Hang Lung Properties, a prominent developer, has set its sights on China's booming luxury market with an ambitious expansion of its flagship Shanghai Mall, Plaza 66. This expansion is not just about adding square footage, it's about redefining luxury shopping experiences and introducing brands that are making their debut in China. Slated for completion in 2026, the expansion will add approximately 3,000 sqm of gross floor area, making room for 20 new stores. Hang Lung's strategic focus on high-end luxury aims to cater to the sophisticated tastes of luxury consumers, promising an unparalleled shopping experience that blends elegance with exclusivity. The resurgence of Broadway in Hong Kong with The Sound of Music, the resilience and potential of the city's property market, and the strategic expansion of luxury retail in Shanghai collectively paint a picture of a region that is not just bouncing back, but is poised for a dynamic and prosperous future. These developments across cultural, real estate, and retail sectors reflect a broader narrative of growth, innovation, and an unwavering spirit of excellence. As Hong Kong and mainland China continue to navigate the complexities of a post-pandemic world, their strategic initiatives and collaborations signal a vibrant and promising horizon for both locals and the global community alike. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.